welcome to the Monday Futures Market Outlook for July 2nd, 2013. This is Patrick Ceresny. As always, we start off with a chart of the US dollar index, and we've had a pretty interesting recovery on the upside as the dollar has retraced a very good portion of the sell-off that has occurred in the early part of June. We at this stage are watching the euro as the euro is slowly deteriorating back down to the 130 level. Any material breakdown of the euro below 130 certainly will be one of the catalyst drivers for pushing the US dollar higher. Initially, we do anticipate there to be overhead resistance as we approach all these previous highs, so we're not most immediately that attracted to the risk-reward proposition. But right now, that very range-bound nature of the US dollar is likely to continue to retest overhead resistance. Next year, I want to take a look at that euro, and we've seen that euro give back a very large amount of the breakout gain that we've seen back over here originally on Draghi's comments throughout the early part of June. This is going to be a very important tell now that there continues to be new news coming out from the Eurozone. If we see that this move breaks down and retests all of these lows, it would validate the fact that this breakout was not a legitimate one. At that stage, the window would start to reopen again for the euro. Now, while there would be no major technical damage done in the next 200 pips lower, it certainly would start to make a lot of traders explore the idea that the euro needs to reprice down to new lower levels and may begin a predominant trend in the euro to the downside. While we're not ready to jump on that bandwagon yet, it's certainly any breakdown below 130 would certainly strengthen that case. Next year, I want to take a look at copper, and when we look at copper prices, we've seen a substantial reversal day come in here. We now had a proper full retest of the $3 area. We were open to the idea that copper could deteriorate even down to the 275 level on the downside, and while we're not opposed to that scenario still developing, we're going to watch to see what kind of reversal day developed yesterday. If we see that copper continues to struggle below 320, 325, then we will remain cautious, anticipating potentially further new rounds of weakness. But if we see that there's substantial follow-through on that reversal, then that we could build up strength in copper, and I could see a very substantial move go the other way. So we're going to continue to watch to see how this shapes up and develops. Next year, I want to take a look at gold, and gold had a very important bounce over the last two trading sessions off of these lows. Now, just because we saw $50-$60 off of a 1200 lows does not necessarily imply that that we know a new uptrend has begun. But this move down was actually completion of a measured move, and that measured move completion occurs in unison with some very negative sentiment toward the group. And so certainly there's a lot of stuff that indicates that this could have been a washout moment in gold that could potentially see a bottom develop in here. What we're looking for is some sort of technical progress back to 1300, 1350 on the upside to kind of indicate that a low is in, but it may be a little too early to tell just yet, but certainly we do believe that a short-term low has likely been put in. Next year, I want to take a look at crude oil, and crude has strengthened right back up to all these previous highs. We were suggesting that 100 and 102 are reasonable upside targets, and that's quite possible here that we could still see spurts of a couple dollars higher. Our first inclination is that overhead resistance should be material, and so as we approach these upper end zones, I would rather say that let's first let oil prove that it's bullish before getting too aggressive here. So I would be looking for this overhead resistance to reject the price here, at least on a couple tests. Next year, I want to take a look at the 10-year Treasury note, and we have quite an oversold state, including the completion of a measured move to the downside down to this 125 level. We're getting a bounce. Bottoms don't develop just from a V bottom, so we're going to probably even see Treasury bonds work their way back to 127 or higher. We probably at that stage could even have a retest along the bottom end, but it's quite possible that Treasury bonds may put in a swing low down here and even have a very very material rally back off of these lows. We don't believe that even, well, while there's always the case that we could have a very material bond crash that is very significant, we also believe it's not the likely scenario. And so at this stage, the much more probable scenarios is that bonds will do some very good retracing of this oversold state, and we could even see us trade to the 2% yield again, and maybe even rallies 129, 130, or even higher on the upside. So there could be a swing low here. You can accumulate any weakness that doesn't break to lower lows. Finally, I want to talk about the S&P 500 here, and we have a market that has now been rallying for over a week off of a short-term low down over here. And what we're seeing here is that there isn't a lot of broad participation, even though we went from an oversold state to now a very neutral state. The rally doesn't have a lot of teeth on it, and a lot of the leadership stocks that were leading the last rally are finding it hard to make any progress, which makes us at least initially skeptical of the sustainability of this rally. If we see that this rally continues to fail in these zones, even if there's a stab to 1630 on the upside temporarily, so long as it distributes like the pattern has demonstrated over the last few days, we'll remain skeptical. If this market rolls over here, there could be one more doozy of a down leg in the next push, and so we don't want to be encouraging too aggressive buying. I would rather be buying knowing that that the next leg of a bull market has started, rather than trying to get a better price here and then get accidentally caught in another downdraft. So I would say a little bit of patience and wouldn't encourage overly aggressive buying this market. That was your Monday Futures Market Outlook. Thank you for joining me.